Welcome back guys, Harry here, known as Tradesharpe, and in this video we're going to talk about the popular topic of fakeouts. Now I'm sure if you've had limited experience or a lot of experience in the markets, one of those experiences would have been experiencing a fakeout. Now we've all been there, we've all taken a trade just for it to go the exact opposite way that we intended and we get faked out. Now it's a normal part of the market. Now unfortunately in the world of YouTube, people will try sell you and tell you the reason why you get caught out in fakeouts is because you're trading like a retail trader. You have to trade like a bank in order not to be caught out in the fakeout. End of the day, trading is not about who you trade like. Trading is about having an edge and being able to use that edge consistently over time and making sure it makes sense to you. So today I'm going to share with you my personal things that I do to avoid fakeouts in the Forex markets and how I make sure that when I'm taking entries, it has the highest percentage to continue in my intended direction and not fake out on me. So if that video sounds interesting, definitely advise you to watch the full video. Hopefully you enjoy it. And with that being said, let's get straight into the video. Now, before we start guys, you know what I'm going to ask for. Can we do the YouTube business? Is what it is. Leaving a like really does help this video. If we can get this video past 500 to 1,000 likes, I would appreciate it. Leaving your comments is really nice because I get to read it. I respond to those comments. And down below is my Instagram link to keep updated. Make sure you join the live streams, all of that. Join the free Discord to get notified and also to have access to all the resources like the stream journal and all of that good stuff, and to be part of a community to be able to ask questions. And also just quickly, spots are opening for the Tradesharpe exclusive. If you want to be part of the exclusive group and want to have interaction and have feedback directly from me, speak with me, work with me, that is your place to be. So all information is on that, link is in the description. Just wanted to make a quick announcement for anyone who was asking, so you can go check that out for more information. I don't want to waste more time. I want to get into the video because I know that's what all you guys are here for, not to hear me talk about this. So that's exactly what we're going to do. Get to the charts and speak about how you guys are going to start avoiding these fake outs and start smashing some TPs. So with that being said, let's get it and catch you on the charts. Alright guys, so avoiding fakeouts. This is going to be a super beneficial video that is going to be very useful, but we need to start with a little bit of basics of avoiding fakeouts, which is exactly going to get straight into it, which a lot of you should know is simply just waiting for candle closures in your trading zone. So the number one thing and the first step is going to be waiting for candle closures inside of your trading zone. So if your trading zone today was going to be this zone here, you have to wait for candle closing inside of that zone. The wicks don't count. These type of wicks here, this is where you're going to get caught out in fake out, and you have to wait for candle closures on the correct time frames. We're talking about 15, 30 minute, 1 hour, and the way you know, I mostly use the 15 myself. No lower than 15 is enough for confirmation. If you're trying to take confirmation on the 5 minute, you're going to fail. And this is where you're going to get your fake outs, is because you are using too less of a time frame for confirmation. A way to know about confirmation is look at the time. Like now it's 1:48. We know the next close is going to be the 15:30 and the 1 hour. So you would simply say, okay, fine. Let me make sure that the 1 hour, 30 and 15 are all going in the direction closing above the resistance that I want to see price get above for me to be able to take a trade. So that's the number one step to avoid the fake out. Now, in order to get into the secret sauce, you can say, is going to be trading during volume times. But not only trading volume times, we're also going to discuss trading in volume times x the push, right? So volume time VT times P, right? And P stands for push. So this is a new formula that I'm exposing, and that's volume times X push. But the first thing we need to cover is volume time. So what is a volume time? Volume time is going to be 1 hour pre-session, right, to 2 hours post-session, right? PS post-session. So that means if at London Open is at 11 a.m. for me, Dubai time, I am going to be trading, looking for trades from 10 a.m. till around 2 p.m. That is my time where I'm looking for trades, and this is my window to take trades, more so in the earlier stages. So you want to be taking, actually no, not 2 p.m, 1 p.m, sorry, 1 p.m, that's my bad, sorry, 11, 12, 1, yeah. Well, yeah, 11 to 12, 12 to 1, yep, scratch that. So it would be 1 p.m, that's my bad, miscalculated. I was looking, I'm like, yeah, it's a bit late. So that's 1 p.m, that's the time you're looking for trades, 10 to 1 p.m. Any time after that, like now, is a bad time. And guess what's happening right on the chart? Oh, we're getting a fake out. Price closed above this resistance, but it's faking out. Why? Outside of a volume time. Same thing for New York. For all of my people, Eastern people, your trading time would be from what? 7 a.m. Eastern, right? To 10 a.m. Eastern. That's your trading time. In this window is where you want to be looking for your trades. Otherwise, you're highly likely to get a fake out. So now let's talk about that formula that I populated, right? And the formula is going to be VT times P, right? VT times P stands for volume times push. So if you guys like this formula, post this formula somewhere, tag me in your stories, and we'll keep people guessing, right? We'll just tag me, post this formula and tag me. No one will know what we're talking about, and whoever's watched this video, I know they know what I'm talking about. So whoever do that, that'll be fun on Instagram. Make sure you're following the Instagram and post this formula on your story and tag me, and people won't know what we're talking about. And put, if you know, you know, right? So the formula here is volume time times push. And what this basically means is you have to calculate, are we in our volume time? You should be always trading during the volume time. That is your trading slot. That is when you should be at the chart. But what you have to calculate against is what push has happened and have I potentially missed the move? So this is the important thing about avoiding fake outs, is has there been a big push during my volume time and am I chasing a move? Because let's say when you come to the charts, you've missed the move from down here to here and you're looking to try catch a move here. This is where you're going to get your fake out, price close back, and it's going to go and continue the other direction, similar to here. Or you're going to get fake out something like this, right? Or let's say you're looking for buys, you're going to get the fake out. So this is a clean example here of that. This is actually a trade we took yesterday. If we go back to our volume time and we have an understanding of what we're looking for, everyone trading in this area here, this is the range we want to be filling. So this is the move that happened during our volume time. Volume move. And then what happens is this is where people get the fake out. Boom. They're going to get faked out in this zone because the push has already happened, right? And this is also, not the best example because we're at resistance here. But let's go have a look at where a fake out would potentially happen. Of course, top of ranges, had a big volume push here, price fakes out. Same thing here, big volume push, price fakes out. Again, this is a very clear example here. Range, volume push, fake out, right? And this is New York session. So this is a clean example of how that happens. You have to use this formula here of the volume time. So this is your pre-session volume time. This was around just after New York open, 45 minutes after New York open. Move happened. Price push bullish. You shouldn't be buying these highs here. This is a bad idea to buy these highs. This is where you're going to lose your trade and get caught in a fake out because the push has happened. This is why people say, are you taking another trade in your session? And I normally end up saying no, because we have caught the volume move and that's the move you want to be involved in. So a number one tip to avoid fake outs is checking, have you missed the move in your session? And was that because you were late to the chart today, or you're not analyzing? Which leads me to the next point. You have to have the correct bias. If your bias is wrong, if you don't know what is going on in the market, if you don't know if we're bullish or bearish or how to find all of that out, that is all on my YouTube channel. You guys need to cycle through the videos here and you can find all of that. Check out the 4-step strategy. We'll tell you exactly how to implement each one of those steps, because I take you through every single 4 steps, and in the description there's a link to those 4-step videos. So this is a great resource. Instead of trying to find it through my channel, just go ahead and check the 4-step video. So that leads me on to the next point, is understanding your bias. Today, for this trade here, this is a clean fake out towards the downside, which I actually took buys towards the upside here. The reason I took buys is I understood my bias was today mixed, and we were at a major support zone. And with all of these wicks here, high chance we're going to get a fake out at this zone. And that comes from analysis. So that analysis comes from where? Comes from a strategy, which leads me on to my next point. You have to be taking setups that you can replicate over time. I have specific setups that I have developed and tested time over time and tested in certain scenarios that I know there's a high chance that I should not be faked out in this move. Inevitably, at some point in your trading career, you are going to get caught out in fake outs. That's just part of the journey, and that's considered as the probability of you losing a trade. It's impossible to have a 90% win rate, 95% win rate, sustainable long term, when you're taking a good amount of trades. If you're taking only a few trades here and there, yeah, you can have that win rate, but having 100% win rate is impossible. So the percentage of loss is going to come from these type of inconsistencies in the market, and inevitably you are going to get caught out in fake outs. So you have to have specific setups that you can follow and replicate, and they have to have data on them. All of my setups are back tested. Even in our stream journal, you can see we are collecting data, 88%. You can see the wins, the losses, all the trades taken, what time they're taken, and all of that information. This is data collection, right? People who join the exclusive group, we also keep track of their trades, right? Trades are taken here, and people, we have a journal of this. All of this here is all data collection, right? This is telling me what's the most popular setup, number one. Most popular here, but look at the win rate on this, right? So some people are probably getting a bit of fake outs here, because when you look at and you compare that to my data, this is where you find information, and without this information you can't improve. And this is my point, you have to have data and as setups that you can rely on. So don't be changing strategy listening to the person who you're going to learn. Now, the good thing with the internet and the good thing with legit people who are trying to help you in this industry is that they've done the work, you know, and they've back tested, or they show it live and stuff like this to prove that this stuff works. But unfortunately, the people who don't, this is where you guys mess up and get caught out in fake outs. And then you believe some guy on the internet telling you in order not to get caught in a fake out, you have to not trade like a retail trader, you have to trade like a bank. And that is the major problem there. So the biggest tip of today's video is that new formula I gave you, the volume time times the push, which is going to help you avoid fake outs. Now, when avoiding fake outs, you also need to understand, and this is the last point of this video, the exact range you are trading, because we're looking to trade range to range. If you are trading the second range of the set, this video is full of gems. I can't believe how much I'm giving out. If this is the second range of the session, that's a higher chance to be faked out. So our range in this area here was this. This was our clean range to be able to trade today, was from here to here, right? So that we can call R1, range 1. The second range would have been here, right? This is range 2. And this is stuff I need to go deeper into. It's a little bit more complicated and needs probably a separate video, or I need to explain it. I'll probably make a video in the group for this. This would be beneficial for you guys. But basically, and this is coming back to this formula, if we've already filled the area that we're looking to fill the second area, we need a lot of volume for price to continue, and it's likely we'll see it pull back before we get the continuation. And that's why I always tell people you need to see pullbacks for continuation, not just keep buying highs. So it really comes down to understanding what the market is doing, understanding your market positioning. Are we at highs? You're going to get fake outs around 4-hour resistance. You're going to get fake outs at daily resistance. You're going to get fake outs at strong supports. Look at this, strong support. What do we get? Fake out. It's inevitable. So understanding where you are on the market, which is all built up to this point. You can't just suddenly start avoiding it. You have to have all the steps before. You have to go and watch the steps before and build to this point. It's not a flick of a switch, and this is what I'm trying to implement and tell you guys. So whoever's been following this channel for a while will now be at the position to add the volume time times push formula to the strategy to help further build on top of their profitability and avoid fake outs. But for people joining new, they might feel a bit lost, and this is why I always encourage people to go back and watch my videos that I put there. It's all the information is there. You just have to go and watch it, and then you have to try apply it. And if you need help applying it, that's where you can take things further. So that's basically what I wanted to cover in this video. A very, very informative video. And yeah, hopefully I can see you guys tag me with this formula here. Would be cool to see. Hope you guys enjoyed this video. If you did, make sure to be subscribed to this channel here, and give the video a like. I do read all your comments, so leave it down below. With that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.